There are over 122 million people forcibly displaced worldwide today. In Afghanistan, decades of conflict have pushed millions across the border and into neighboring states. For these individuals, survival depends on a single economic strategy: earning enough to support themselves while sending money back to the families they left behind. To move those funds safely, they need a bank account, but global regulations require specific, recognized identification, documentation that most refugees simply do not have. In Turkey, for example, opening an account requires a residence permit, called a kimlik, but for a newly arrived Afghan migrant, securing one is an uphill battle against rising rejections. Banks see this lack of documentation as a liability. To avoid massive compliance penalties, they choose to deny financial services to refugees altogether. This exclusion doesn't stop the flow of capital, it just pushes millions of people into a high-risk, cash-only existence. This is the Hawala system, an informal network where brokers transfer value through trust, without physical currency ever crossing a border. It's the primary way the Afghan diaspora moves money, operating entirely outside the regulated banking sector. For host nations, this creates a massive engine of physical, untraceable cash circulating in the streets. The central bank has zero visibility into the billions of dollars moving within its own borders. Authorities can't monitor money laundering, governments lose out on tax revenue, and off-book cash destabilizes currency controls. By trying to protect the banking system through exclusion, the state has built a financial blind spot it can no longer monitor or control. There is a way to integrate these populations without breaking global compliance rules. The Digital Local Currency, or DLC framework, treats this as a data problem, not a humanitarian one. The core insight is simple: refugees aren't starting from scratch. They already have verified financial identities and banking histories in their home countries. Native commercial banks in Afghanistan remain active and connected to global networks like SWIFT. Instead of forcing a local bank to verify a stranger, the system utilizes the refugees' existing trusted relationship with their bank back home. The DLC framework functions exactly as infrastructure as a service, a direct, secure bridge between the host bank and the native bank. The host bank in Turkey provides the digital payment rails, handling the technological heavy lifting behind the scenes. The native Afghan bank manages the retail relationship, customer service, and crucially, the background identification checks. The refugee makes a digital payment through their native bank's app, running securely on host infrastructure. The host bank captures transaction volume without taking on any of the retail or compliance risk. Scaling this model globally reveals a massive sector of the economy currently hidden from the books. There are over 43 million refugees worldwide operating in this untraceable cash environment. If each person transacts a conservative $1,000 per month, it means the global financial system is missing out on a market worth $45 billion every single month. The DLC model converts that shadowy cash into traceable, transparent digital value. Refugees gain a reliable lifeline, regulators get a clear view, and banks access risk-free revenue. Solving financial exclusion doesn't mean lowering security standards. It means using technology to move $45 billion out of the shadows and into the formal economy.